Hello, everybody. Today is Monday, January 27th, 2025, and this is a presentation for Zacks Professional Services about Zacks' top finance ideas for three major sectors entering 2025. Well, I've got four parts today. The three parts you all know about as we've gone through over the last year or two. I'll do the top stocks in these three sectors by market capitalization, then by the maximum number covering analysts, and finally by the core Zacks Rank element, the largest percentage change in current fiscal year one earnings estimates. Part four will be a little different. We'll go through the top investment fund ETFs. So it won't be just stocks today. We will talk about ETFs and stocks today. So that is the innovation and why I have titled this Zacks Top Finance Ideas Entering 2025. We really need to get this entire framework in place. So keep in mind, this is my views. I do have a PhD, and they are not necessarily the views of Zacks Investment Research. The rest of this you can read at your leisure. Of course, we always start here with the review table for these three finance groups in 2025. I put in yellow the finance groups, and here is the industry codes 50, 51, and 52. Over here is the market capitalization ranking. Of course, JPMorgan at the top of 50, which is the investment managers brokers. Bank of America, Wells Fargo, Morgan Stanley, Goldman Sachs, BlackRock, Citigroup, and down here Schwab. Although we will find out Schwab is actually very profitable. KKR just joined the S&P 500 not so long ago. They are there now. Apollo Global is in there. So this is the investment managers and brokers. In 51, we've got a listing of the major ETFs, not necessarily companies, but these are the ETFs, and we're going to put them in here at industry group 51. Down in 52, this is real estate, the real estate investment trusts. Some of these names you may or may not know: Prologis, Brookfield, Equinix, American Tower, Welltower, Digital Realty, Simon, Public Storage, Realty Income, and CBRE, CB Richard Ellis. All those are the big ones, but over here you're going to have lots of smaller ones. So keep in mind, you can always come back to this list and check for the names. For example, we will discuss the covering analysts' love of Tradeweb Markets, ticker TW, and also the struggles that Franklin Resources, ticker BEN, has been having in recent times. Raymond James has been a great stock, and it's now getting a lot of coverage. So keep in mind that we will also do the Zacks rankiness. And of course, here you get Robinhood at the top of 50 because it's getting a lot of estimate revisions of late because of the stock market performance. But there's other names you probably don't know that are worth looking into. Brookfield Infrastructure Partners is one of them, and we will discuss it. So always return to this slide during these discussions for your tickers and your overview of how this fits together. Okay, so top stocks by market capitalization will be our first stop, as it always is. And here is what we've got. We've got the return on equity for these top 15 stocks in these areas. So over here, of course, the return on equity, like I said, with Schwab's 18.2 is even better than JPMorgan at 17. Citibank, of course, has the weakest and lowest return on equity, quite dramatically lower. Morgan Stanley, Goldman Sachs, and Wells Fargo kind of in the same boat together. So keep in mind that it looks like JPMorgan, from a return on equity perspective, is the dominant bank, not only from market cap perspective, but return on equity perspective. Simon Property Group, just an amazing return on equity. I'm a little cautious of this chart and this information, but there it is. And of course, Public Storage, big bump up in the post-COVID period, now still at 34 return on equity. That's an incredibly strong equity return. There are other names. CB Richard Ellis, of course. You can see that it's been going down into the 13 ROE for some time, though. I mean, for 20 years. I don't know what to say about that. I think it's just a long-term trend, and I'm not sure we can make much headway about it. But keep in mind, you can always come back here for the intra-industry stories. That's what I would keep my eyes on. You know, you're looking at the same stories within a given industry. or something like return on equity. All right, the forward 12-month PE ratios. Again, you're seeing over here with KKR and Ares Capital Management and Interactive Brokers, just the incredible momentum run that's gone on in the stock market that's translated into these investment funds that are, well, Apollo Global is in here, PNC is in there. So keep in mind here, again, you also see with the banks, the same movement of less dramatic nature than this, but still the same movement. So people are still paying up. I mean, 32 times, 29 times for some of these groups, 28 times for KKR. These are actually very heavily priced versus these major money center banks that are, lower PEs that one would likely understand more traditionally. Down here in the real estate groups, of course, you've got different stories to look into. And again, these are going to be the ones that are more attractive from the short-term Zacks Rank and covering analyst perspective. These are the bigger and longer-term names. So can always come back here, look through this at your leisure. Total debt, not a lot to be said here. Obviously, things like this that are building up. Businesses with debt, you might want to look into who's building up these businesses. Ticker O is here, ticker VICI is here. And of course, down here you have CB Richard Ellis, which is that traditional small, massive group, a much different story. So this is true also with the reinvestment rates. They're not very helpful, so I won't spend a lot of time with them. Part two, the number of analysts that cover a stock can show you Wall Street interest. Wall Street covers stocks that people are interested in. And if they're interested in, they're interested in buying and selling them. And that's one thing you should know about. All right, so what do we got here? We've got an incredible nice run in Tradeweb. I talked about ticker TW. Look at this chart. 1, 2, 3, 4, 5 years now, Tradeweb has been really dominant. Obviously, during the rate hiking cycle, the stock went down, but since then it has been nothing but going up, and the estimate revisions are there to support it. Ticker BEN, Franklin Resources. I told you this company did an acquisition, I believe, and it didn't turn out well for them, and they're struggling as a stock. Ticker RJF. This is Raymond James, similar to Tradeweb. You're seeing really nice estimate revisions, particularly the last 2 years for Raymond James. Tradeweb, a little longer term story. Raymond James, a little shorter term story. Ticker C. Big restructuring here. You can see recently drove their profits back up again. Obviously, they have the weakest ROE. It's understandable why they did this, and it did drive the stock back to its highs in 2021. So not beyond its highs, but back to its highs. Down here, you've got all these real estate names, equity, real estate, ticker Mid-American Apartments, and other names like this one, ticker O, which is really actually quite dramatically looking strong, as well as ESS. I just want to point out that real estate, was until the rate hiking was a really strong business. And lately it has stalled out in most of these charts because of the change in stance on the Federal Reserve System. However, the estimate revisions, as you can see, other than the apartment one, which is actually going down, which speaks to the slowing down of the rental rate increases here. The other three are actually looking quite well from a stable perspective. So real estate, consider it more than you might think in this context. All right, earnings per share forward 12-month charts. I mean, things like BlackRock and LPL are obviously jumping out of this chart and just showing you some incredible performance. JPMorgan, of course, really a nice chart here. But again, you got things down here to be concerned with. Simon Property Group, which we talk about the high ROE, is actually topping out its earnings per share perspective right now at a high in the 2019 period. Equity real estate, nice run here out of COVID. This is true for all these groups. It has been a strong market for real estate in the post-COVID environment. I think that probably surprised a lot of people. But keep in mind, we're also seeing some topping action here in the real estate businesses from an earnings per share perspective. Keep that in mind as well. All right, net margins. Again, here's Tradeweb's story. If you don't know it, they're based in New York and they trade all kinds of stuff. Credit, money markets, and equities is among them. And they also provide all these different services for them. So here's Tradeweb with a net margin of 27.5%, even better than Schwab, or they're very close to it. And then down here, of course, Citibank at 4-5%, and just really weak. Of course, we talked about that restructuring that's going on there. Here's Raymond James in the middle of the pack. So BlackRock, really the top performer in this space of investment brokers and managers. Down here, you've got Public Storage with an even better ROE. And GLPI, I didn't know this name, with the best ROE, but that is a REIT for the gaming and leisure properties. And it's based in the United States. So this is gaming and related facilities. Of course, this is casinos. So keep in mind here, I've given you 2 tickers and I've given you lots of information that you can take at your leisure at the later stage. Go ahead and get these PowerPoints from Zacks Professional Services. I will give you the number at the end of this presentation. Total debt to capital, not terribly useful, so I will skip it. On to the Zacks rankiness. So number 1, we've got Brookfield Infrastructure Partners. Where do I see this? BIP. Revenue forward 12-month charts. BIP was established by Brookfield Asset Management. It's their infrastructure play and its current businesses in all parts of North and South America, leveraging that infrastructure. You can see this was the Biden story, and it continues to build. Strong story for you to know about. BIP. Keep that one in mind. Okay, so now here we've got some other new names. Ticker BHR, I circled it here. Braemar Hotels and Resorts, based in Texas. This is a name you may probably not know. It's a REIT. It has an interesting story for you. And then RLJ Lodging plans hotels in urban, suburban markets. It's also come up, the strong hotel market, and basically compact full-service hotels, RLJ, and then Braemar Hotels, BHR. So cash flow yield perspective, Zacks rankiness will now produce 2 names you probably do not know, but they're in the hotel REIT space. Hotel REIT space. So people are moving around. They're using these hotels. All right, another set of names here. This is GCMG, price to free cash flow. It's based in Chicago, GCM Grosvenor, and they're in all kinds of markets: New York, Los Angeles, London, Tokyo, Hong Kong, Seoul. They're everywhere. They're doing a lot of real estate, and their business has been doing quite well of late. Interesting global story for an alternative investment manager to know about. And down here, you've got First Service Corporation, ticker SFV, Commercial Real Estate Services in Toronto. Again, a name you probably do not know. That's why I picked them up from the price to free cash flow spectrum. First Service. People are buying these stocks up. I assume it's because they think the businesses are going to do well in the future. All right, an enterprise value to free cash flow. Obviously, KKR is jumping out at you. Really a big run the last year and a half. They joined the S&P 500 last June 24th. They have insurance businesses. They have all kinds of equity real estate stuff. And again, an alternative asset provider, basically a big private equity group, and they are just sticking out quite dramatically in this chart. All right. On to the next one, price to sales. Over here, I've got the blue line being the investment brokers and managers. I've got the green line being the real estate investment groups. These are the 2 groups we've been talking about today. And as you can see, price to sales has been really driven by the investment, equity groups, not so much the real estate groups. They have diverged of late. They were always in sync before, now they have diverged. However, the earnings are very much in sync. So there seems to be a breakdown here between the valuations that are being bid up on the investment manager groups and the stories of the fundamentals, which are both in sync. Down here, these are less useful. I circled the ones that are more useful. Okay, earnings return on capital perspective, again, you're seeing the investment broker and manager business take off and the return on capital for real estate not do so well. So now we suddenly understand why these have diverged of late, because the return on capital is so much better for these investment managers and brokers. They're scaled up, the transactions are moving through their businesses, and they're making a lot more return on capital. That's a story we need to understand between real estate and investment brokers and managers. Okay, final thing I'm going to clean up here for you, which we don't do often, which is ETFs. This gives you the broader perspective of passive investment management and the big names and how they're performing. I think this is really important for you as an investor to understand where we are entering 2025. So, iShares Russell Growth ETF. Look at this thing, IWF, last 2-3 years, like the Qs. We've seen an amazing drive for the growth stocks. Now, is this a bubble or not a bubble? Keep this in mind. Down here, XLF. The last year, as we spoke about, the return on capital moved up and the finance sector moved up. So once the Fed got out of the way, inflation fell, the finance sector ran up. Invesco Equal Weight, RSP, of late has done well. This is beyond the Mag 7, of course, and that is very interesting to see. So again, you can always come back here, but you can see, we've got a building story. First, it started with growth, and then it moved on to the finance sector in the environment where the Fed got out of the way. All right, miscellaneous data points. I want to point out when these, ETFs started and their expense ratios, their names, their sponsors, tickers. Again, this is just going to be helpful for you to understand. And come back to this at any time and use this miscellaneous data point chart to help you on understanding these tickers. Top 10 holdings. Again, just look at, first of all, the big names, of course, NVIDIA, Apple, Microsoft, the Mag 7 are up here. But there's other names down in here that are different. Here's a set of names that I think are very interesting to look into. Here's names that are, I think are more relevant for picking stocks. And then, of course, down over here, you've got some names a little more outside the United States that are of worth for you to look into. But again, these names are going to be all the same. These are the big Mag 7 names for these top asset managers. So again, as we know, you want to play any of these groups, the Qs in particular, you played the story of the Mag 7, basically. All right, return analysis, really useful stuff here. Cumulative returns, mins and maxes. You can see, again, this is what you're going to get out of a return. This is what you're going to possibly lose. I think this is very interesting in terms of analysis. Very helpful. It's from 2014 to 2017, and then on to more recent stuff as well. So you've got things back to 2017, but all the way up to 2024 as well. This is really nice stuff. Go ahead and use this chart and study it closely. All right, PE and price to book. I just want to point out, again, the S&P really under a momentum trading environment in both price to book and price to equity. In this period for the last year and a half, you've seen this. This is the story of the Mag 7 stocks. The rest of them are not getting bid up as much as those stocks. It's a story you all know about. I'm not telling you anything you didn't know. Just go ahead and confirm it here. All right, that's it for me. Thanks for attending. I hope you enjoyed it. And you can get these slides from us with this information. Please call us, 866-794-6065. Send us an email, strategycall@zackspro.com, or find us on the web, www.zackspro.com. We also have a LinkedIn page, Zacks Professional Services, and we do put out tweets on Twitter at ZA Tools. However, for this particular set of slides, I would recommend the first set of information. Give us a call, 866-794-6065. We will send the slides to you, or send us an email at strategycall@zackspro.com. Thanks much, everybody.